If you walk down the street in Iraq today, you see a financial reality that doesn't match the news. You see local money exchange shops pricing the US dollar at a massive premium compared to the official government rate. This chart maps out the conflict. The flat line is the official exchange rate, pegged at 1,310 dinars. The volatile line is the parallel street rate, trading much higher. Seeing this wide gap, amateur traders mistakenly assume they can instantly profit through easy arbitrage. But the system is locked down. Retail traders cannot access the official rate in volume. That gap you see acts as a warning sign. It signals severe dollar demand and a risk that the Iraqi dinar could face sudden devaluation. Because the official rate is heavily restricted by the Central Bank of Iraq, you can't just walk into a bank with capital and buy dollars for personal Forex speculation. That restriction creates a vacuum. And filling that vacuum is a dangerous black market of unlicensed, local entities posing as retail Forex brokers. You will spot them easily. They exploit the confusion around the dinar by promising guaranteed returns or incredibly high profit margins to get you to deposit your cash. The trade might even look successful on your screen at first, but the moment you attempt to withdraw those supposed profits, you get hit with endless administrative excuses, sudden account freezes, and total radio silence. At that exact point, your money is firmly locked inside an unregulated trap, and it is gone completely. To protect your capital, you have to bypass the local Forex ecosystem entirely. Your only viable path is finding a regulated international gateway. Even if you find a legitimate platform offering the Iraqi dinar, you shouldn't trade it. It is a strictly controlled currency with almost zero real market liquidity. Without heavy trading volume, the cost to enter and exit a position becomes massive. You will face huge spreads and brutal price slippage that mathematically drain your account over time. To give yourself a statistical chance of success, you have to abandon the dinar entirely and pivot to major global pairs, like the euro to the US dollar. This matrix outlines the exact trade-off. On one side, the IQD carries high central bank risk and terrible liquidity. On the other, global majors are driven by deep macroeconomic data that is readily available and far easier to analyze. The massive daily trading volume of those major pairs shrinks your spread costs down to a fraction of a pip, making it mathematically possible to keep the profits you earn. Your strategy has to be trading the global markets from Iraq rather than attempting to extract profits from the manipulated Iraqi market itself. Once you know what to trade, you hit the hardest logistical wall, moving your trading capital. Attempting to send a direct international bank wire to an offshore broker is almost guaranteed to fail. The Central Bank of Iraq heavily scrutinizes these direct offshore wires. They are routinely delayed indefinitely, investigated, or just outright rejected. This flowchart breaks down the workaround traders use. Instead of wiring directly, you route your local funds into a digital e-wallet like Skrill or Neteller. Many traders also use crypto stablecoins like USDT to act as this bridge, completely bypassing the local banking blockade. This pipeline introduces unavoidable friction. By adding these steps, you will be forced to pay intermediary fees to those third-party digital wallets. And if you choose the stablecoin route, you expose yourself to the regulatory gray areas and extra volatility inherent to cryptocurrency networks. But once your capital is digitized in that central hub, moving it seamlessly into your regulated offshore brokerage account takes seconds. You have to weigh those digital transaction fees against the very real possibility of local authorities freezing your entire initial deposit. E-wallets introduce friction, but they remain the most pragmatic, reliable choice to securely access stable global markets. Your location also dictates how you manage risk. Even when trading global currencies, living in the Middle East means you are exposed to constant, headline-driven geopolitical shocks. A single unexpected headline or regional conflict can send a violent shockwave through the markets, overriding a perfect technical setup in an instant. If you are day trading or scalping on tight margins, these sudden volatility spikes will blow right through your positions and trigger your stop losses before you can react. This chart compares how different styles survive that volatility. Scalping sits entirely in the high danger zone. To protect yourself, you need to shift down to the green zone by adopting a daily chart swing trading strategy. By extending your time frame, you can use wider hard stop losses and smaller position sizes. This gives your trade the physical room it needs to absorb those unexpected news shocks without automatically closing out. You sacrifice the quick dopamine hit of fast trades, but you gain the essential durability required to survive a completely unpredictable news cycle. The final step is executing this strategy through a legitimate international gateway that actually accepts Iraqi clients, like FXNX. Before you fund an account, remember the primary rule of emerging markets. If a random account manager messages you on social media offering unsolicited advice or guaranteed profits, they are a scammer. Run every potential broker through a strict checklist: top-tier regulation, e-wallet compatibility, major pair liquidity, and 0 guaranteed profit claims. And do the manual work. Cross-reference the broker's exact domain against official regulatory registries to avoid sophisticated clone sites. Ruthless due diligence is your first and most critical risk management trade. Before you ever hit a buy or sell button, you have to prove your gateway is secure. Ultimately, you are navigating these hurdles to earn profits in stable US dollars and shield your wealth from local dinar devaluation. To get there safely, you have to accept the logistical friction of e-wallets and commit to the rigid discipline of wide-stop swing trading. Your immediate next step is to open a verified account with a compliant, regulated broker like FXNX that operates within these exact parameters. But before you transfer your life savings, execute a mandatory test run. Make a simple $50 deposit and withdrawal using your chosen e-wallet to verify the pipeline is clear from end to end. By treating the Iraqi Forex market as a solvable logistical challenge rather than an arbitrage lottery, disciplined traders can secure their capital and trade the same global trends as everyone else.